Hey, Dan Passarelli here. Well, we've been experiencing quite a bit of volatility lately, both of the historical or realized volatility kind, as well as implied volatility. Let's take a look at the VIX. So the VIX right now is, I'm shooting this about 15 minutes before the close today, was at 1696, which is slightly higher than average when we go with the long-term average. I look at that and I realize, well, that's because there's a lot of people buying volatility, which from a historical volatility standpoint, this is a volatility buyer's market for sure. And what's interesting also is when we look at the implied volatility of the VIX, so we're basically talking about the volatility of volatility here, we see that it is very much so in the top half of the 6-month range. The only thing that was higher was when we had that big weekend on August 5th, where we had a pretty good spike for just a few days. But overall, the volatility of volatility is pretty high. So there's a lot of expectations for volatility to increase that are going on right now. And here are some of the reasons for that. To start with, this is an interesting week. You have NVIDIA earnings that came out after the close today, which can drive the market. That's one. If we go here and we look at a chart of SPY, we see that we did indeed get that slow stochastics crossover that does usually tend to lead to follow through to the downside, maybe just for a couple of days, but it does tend to lead to that follow through. Now, the next thing is we've got the PCE number coming out on Friday, and that becomes really important because at this point, a rate cut is 100% priced in for the September meeting. Now, it's about 2/3 priced in for a 25 basis point cut and a third priced in for a 50 basis point cut. But there is no room for anybody to think that there's not going to be a cut. Let's take this a step further and look at all the volatility that is on tap remaining for the rest of the week. Well, we have the holiday on Monday. On Monday, we have Labor Day, so the market is closed. And when we get those 3-day weekends, we tend to see 3 days of time decay come out, which makes implied volatility actually look lower. So we're getting these things that happen to cause volatility to be up for the rest of this week, but then the implied volatility is likely to get really smashed come Friday, probably just late morning it'll start getting smashed. So we do actually have a lot of volatility this week, and that's something that it is important to be prepared for. Hope that helps. This is Dan Passarelli, Trade Smart.